Well, we have a really dangerous moment coming, and I'm not talking about all of these people that are currently revolting. That's a lot. To me, that's a whole lot of people. Look at that. As far as the eye can see, and I don't want to go into it, it's currently happening in Rio. And, you know, you got some people will say, this is why they're doing it. The government will have one propaganda, the people will have the other, and then it's just basically a bout of confusion. But in the end, they want to burn this whole system down. Well, kind of. They want you to burn it down, and then they have the solution. And for those of you that are going all in on the stock market right now, there is more pain ahead, which I will show you in just a subscribe. Thank you. More pain ahead in just a moment. Russia, first us, America, we gotta like blow things up first and then say, it wasn't us. It's like having kids in a house. He did it, she did it. Russia says major dam hit, also known as destroyed, by U.S. supplied rockets. I mean, currently the U.S. is hitting just about every hornet's nest that they can find. And that's just the government. Then you have the Federal Reserve, who is holding us all underwater. Okay, there's bubbles. They're waiting for the bubbles to stop. There's still a few diamond hands in there. They are going to wait until you, and I'm going to show you. Until you have no more savings in your savings account. You're totally broke. You're screaming and you are begging for a savior, income government. Basically, right now we are getting hit at all angles. From, those, when you drop those things that explode, the governments are, to monetary tightening, which now money is very expensive. If you're in the business world, I may get to the story, but people aren't borrowing, people aren't lending. The mortgage industry is down 90%. The big players are down 90%. You think you're going to get out there and let's raise some capital. You're not going to raise capital. There is no more raising, and there is no more capital, and there is no more liquidity. Also, breaking news from Dr. Emmett Brown. I saw him. Back to the Future. I would definitely listen to him. He knows what's going on in the future. He's actually going to predict the future for you. He says stocks will soar, but not yet. Okay, so hold on. House prices will slump. I think they're going to do a little bit more than just slump there, doctor. And the Fed rate hikes could tank the U.S. economy. No, it will tank the U.S. economy. They will make sure of it. And you haven't even felt the full effects of the Death Star because they just started warming up. No flux capacitor on this one. It ain't broken. Here are the 8 best quotes from the new interview. Breaking news. So here we go. Stocks soar 30% in 2 years. So you just have to hold your breath for 2 years. Housing prices are going to drop 15%. The Fed overlooked the inflation threat. No, they didn't. And now it's hiking rates too fast. No duh. Siegel warned the Fed's war on inflation is increasing the risk of a U.S. recession that we're currently in. Thank you, doctor. And also, for those of you that leave comments in the comments section, thank you. Well, besides all the bots, thank you. I can't stand those other ones. Trust me, if I could get rid of it, I would. But you know what drives me crazy is when, take the stock Carvana, drops 99%, or maybe it's 95%. And then it goes up one day. You're like, look, the stock market went up. Bravo, you said it was going to go down. Bro, you just lost almost 100% of your entire portfolio. Since Tesla's on the screen, let me just click on it. Goes from over $400, say $450, down here, okay? To me, if I lose over half of my portfolio, well, that's a crash. And we're just getting warmed up. And here, let me show you from Market Watch, new stock market lows ahead. That means, the lows we're currently in and not low enough. We're going lower. What investors, which I'm more of a trader, need to know as the Fed signals rates will be higher for longer. Here, let me tell you. If you don't know what you're doing, stay out. Because that is clearly a bear, clearly on top of a building that they call the Federal Reserve that is not even federal. Dump, dump, dump. And they don't reserve anything. It's not even a bank. They're just a big scam. For some reason, the people seem to want to just listen to every single word that comes out of that man's mouth. So if you think changing the overnight lending on the short end of, then you have at it. Then if that's what you want to believe, Santa comes in less than 2 months. And yes, I still believe in Santa Claus. No, he does not bring me anything because I live in Austin and I'm in an apartment and there is no chimney. So I get ripped off every year. But I just want you to read this sentence. Let's all read it together. Let's play popcorn, which I hated that in school because I couldn't read. As you know, when I try to read articles, you're like, I see how he skipped over that word. It really wasn't that hard. He should have given a whack at it. Federal Reserve Chairman Jerome Powell sent a clear signal. Actually, he was waiting for a reporter to say something because the market was raging higher. And then Jerome's like, it is? Interest rates will move higher and stay there longer than previously anticipated. So why stock markets go higher? Well, it's a beauty pageant. Investors wonder if that means new lows for the beaten down stock market lie ahead. And I would say, yeah, right? Pretty much unequivocally, yeah. That's if you believe everything that, if you're following the Fed, right? Everything that Jerome says, then yes, we're going quite a bit lower. For those of you that want to know how much lower is the stock market going to go, the little red line, but you're covering how much? Who cares if I'm covering it? You just need to understand how this works. This predicts the future. Look, a couple things that I got up here, just so you want to know when you should be buying the dip. See this gray box area right here? I know we're above it, but soon we're gonna go below it because there is no price action. VRVP. I could be wrong on that one. That's the indicator I use. It's in the new bear market course if you would like to grab it for 200 before it goes up. Looking at this, it's going to hit here and it's going to go down there. The yellow line, that's the 21. Typically in bear markets, we like to stay below that. We did pop above it for a second there, but we're currently below it. And let me zoom in on for you so you can kind of see where I think we're going to go. We got a lot of support. Okay, you got a support line right there. Okay, when you break that, you're in trouble. That's the 200-week moving average. When you break that, we're in trouble. We're currently under the 21. That's bad. The 200-day moving average, which I will bring it down to right there. We're under that. So you have all of these deprecating factors going against you. But if you want to say, hey, market go higher, all right, you go be that person in that little squeeze. It would also be called a short squeeze, and I can guarantee you, and I can't guarantee very many things, if that little blue line goes above, okay, I'll give you a throw over of the 200. You go into that little dark area, number one. If you don't short this thing, you're cuckoo. But I'll eat my wife's panties. That is a bet that I make with you. What is the upside? What's the upside for me? That you liked or subscribed or bought the course to learn how to do that. Pick one of the three. And also you have to let me throw them in the blender because I don't want to eat them solid.
Bravo, if I could just chime in real quick. Hi, everybody. It's me. It's Skylar. You don't want to start trending for your wife's panties. No, please, everyone, do not type panties in the comment section. Thank you.
Thank you for that, Skylar. No panties in the comment section. Okay, got you. Now back to the charts. And really quick, just in case you missed my other video, hey, Walmart, see it's in that section? Yeah, you right click sell. I know if you don't understand that, you make money going down. And when Walmart struck that other area, it went down 41%. I thought you said the market's going to lose over 40% on Walmart. Come on, something's wrong. Just be careful because you're above the 200, both of the 200s, the week and the daily. So maybe Walmart, but no, they have so much debt on their books. I also could be wrong on Walmart's debt. Don't hold me to that. These are just comments that you guys have left in the comment section. Like the reason why they're closing all those Walmarts, and it's a lot of them, is because all of the shoplifting. I don't know. That's just what you say. And there's a lot of like tinfoil hats about like what goes on down below Walmart. I had a joke there. I'm just cutting it there. I don't need Skylar calling me. Top Fed official. Now we're back over to the Fed. Off the stock market, back to the Fed. Stop diamond hands. I need to get a shirt that says, please stop diamond hands. Top Fed official. Fed will keep at this. Let me say that again. The Fed's going to keep going, right? Till all the bubbles stop. Until your savings accounts are drained. And they're currently not completely drained. And they say Kansas City Fed President Esther George should be celebrated for being honest about how the Federal Reserve works. And Esther, I'm not sure if you even know how the Federal Reserve works. But how the Fed works is for a completely different video that I have done long time ago. I want to draw a line of where I'm off a little bit. Sorry. My apologies. You guys have nothing in your savings account. Here, how far do you want me to go back? Let's go back to here. Okay? So we're currently at this red line. Oh, but Bravo, there was one time where it dipped below that. No, you guys are broke, and they're going to make you more broker. Actually, the only way to fix it, yeah, it's right there. Just give people cash. You want to help out the middle class, which they're not. That's how you would do it. Just give them cash. But at the same time, your cash is being drained. What are you guys doing? You guys are running to the banks and just taking it all out. Look at this. Bank of America says rush to cash is now at fastest pace since the pandemic. So it looks like you and I think something really bad is going to happen. And I'm going to say, I agree with you, Scott, Brian, and Megan. But holding sheets of paper, well, probably won't be your best bet, because they can very easily tell you that that's theirs because it's their name's on it. It says Federal Reserve on the top. Janet even signed her name. I think Jerome's on there a few times. I could say, you know what? We want to implement this new digital dollar, right? That they already have ready. 4 months away, Fed now. It fixes everything. You just got to blow everything up first. But if you think paper or silver, which I like this, when everything goes down, everything breaks, having some real stuff rather than the digits, the debt digits. You could be on the right side of the trade on that one, but I don't know how long. It might never happen in your lifetime. So I do not know. Not financial advice on this channel. So at the same time, you guys, while you're rushing into the bank, say hello to your teller, because they're going to be out. I'll show you in just a second. Wells Fargo mortgage staff says, no staff. Brace for layoffs as U.S. loan volumes collapse. A lot going on in the banking system. One, banking system not standing on two legs right now. Maybe going bye-bye, which that's a well-designed plan. Yeah, you think the Federal Reserve could... That would be a good idea if I was the Federal Reserve. But kind of limit your competition, right? Here, those banks that, oh, wow, see what they've done to you? Well, when they fee you to death, and that's why we're punishing them. Wells Fargo faces demand for record fine exceeds $1 billion. They're hitting Wells with $1 billion. The Fed is like, you know what? They're evil. You have to stay away from them. Use our new Fed now. You'll have a little wallet. We'll create a little ledger and we'll put money in it. And then we will eliminate our competition. Well, except for the Treasury. We got to figure that. I think Jerome's probably going to propose to Janet, and it will be one happily ever after marriage, which is completely unconstitutional. I'm sure the people will stand up with pitchforks and fire and say, no, we've had enough. Probably won't. Give people money. They're like, wait, money? How much? Okay, what do you want me to do? Just know, before the pitchforks, before all of this, they got to make it even worse. That's what this video is about. It's going to get worse. I keep telling you, like this, Larry is just like so depressed. What's wrong, Larry? You got your calculator. You got your, I don't know, you got gifts over there, so you look like you're doing okay. Debt disaster. Oops. Maybe you're not okay. Maybe you shouldn't have bought those. Maybe you should have listened to Dave Ramsey. Average American owes more than $25,000. Please, baby Jesus, tell me that in that $25,000 is at least your mortgage. Something tells me that it is not, because that would be a very inexpensive mobile home. Nearly half couldn't cover $1,000 emergency. Isn't that what Dave says? Is it 1,000, 2,000? I don't know what it is. 25,000. That's what you guys have on credit card debt with high interest rates. Boy, that's not good. And not just that, not so good. You guys are now at 51%. That's not good. Paycheck to paycheck. You are one paycheck away from the new Fed wallet. Looking at the rest of this article, the survey also found out that 1 in 4 are not confident in their ability to manage their money. So that basically means 1 in 4 males, you're married. I get it. I feel your pain. I know this because I go into my bank account and I go, hey babe, who's Neiman and who's Marcus? That's actually Neiman. Look, everyone trips out when I'm like, look, my phone can fold. what? It didn't break? Who's Neiman Marcus, babe? And she's like, oh, that was the mechanic for your car. There was a guy named Neiman, another dude named Marcus. Marcus was a nice guy, though. He did the carburetor thing for free. And then I find out it's a handbag. So I get it. Yeah, I'm not confident about my ability to manage my money either or either. Oh, and last but not least, I get it. It's bad for you. It's bad for me. How could it be bad for you? Bravo. Advertising. It's actually everyone doing YouTube. So hit the like button for your YouTubers. I know a lot of them are dropping out. They're like, not worth it. Bye-bye. Even Nick, really good housing market kind of guy. He's like, that's it. I'm out. Advertising. So hit the like, hit subscribe. Make us feel like we're wanted. Please. It feels good. I'm okay. I'm just a little insecure. Advertising veteran Martin Sorrell. Did I do okay on that one? Warns the coming recession. We're in a recession. Will be different from the ones we've seen in the past. Capital founder threatening the economy. And then they go into how basically like the concerns of no money going to ads. I really think Twitter, Google, Facebook, like people want to spend money. Everyone's like, nope, I'm out. Oh, yes, it is doomy. It is gloomy. There will not be a soft landing. It's not transitory. She's not kind of pregnant. There are a lot of things that you guys need to prepare for. So hopefully, I mean, last thing I could think of is, hey, if the market goes down, can we make money going down in the market? Yes, you can. So at least in as bad as it's getting, take advantage of it. So that's all I got. I'll see you tomorrow.